Good afternoon, everybody. This is Chris Robinson, Robinson Ag Marketing with today's post-close grain and livestock comments for Wednesday, the 14th day of January. Well, we made it through hump day. Lots to cover here. Start out with corn. 7 cent range, finished up only 2.25 cents. So if that's the best they can do for a bounce, we have some issues. March beans finished up 3.75 cents. Again, with 10 cent range, we couldn't take out 10.50. It just felt like a bit of a short covering rally after digesting the USDA um, sell off. Right, we basically broke 30 cents in corn and beans after that report. I think the biggest surprise was the fact that corn had a 30 cent trading range for the past 18 months, and we did it all in one day. Uh, Even I didn't expect that, to tell you the truth. But those are some pretty bearish numbers. And now you've got the managed money who's establishing a short position. They had a long position in beans, so they had to flip in there, and they were really had a small long to possibly a small short in corn. They really didn't have a lot on 10,000 one way or the other. My guess is that they're probably short 10 or 20,000 right now, trying to get that up to something more substantial. So, are they the reason we're going lower? No, the USDA is the reason we're going lower. The funds didn't even really have a bet going into the report. They didn't have a feel for it either. Um, and the wheat finished up a couple pennies. I think as corn goes, so will wheat. Wheat, I think you still need to be defending, especially if I'm growing in Chicago. If I'm growing soft red winter, don't let 530 wheat disappear from you. There is still some substantial chart risk if we can't get a bid in this market. If you didn't get my letter today, call me. I can send it to you. I posted it on Facebook today if you didn't get it, but I did want to share it with people, especially for guys who are wondering what to do, what's available now. With the risk that still's out there, I tried to outline it as best I could. I mean, the charts tell us that there's 40 or 50 cents worth of risk in corn. Now, I got to pull the car over and turn the engine off and, crack open a can of Diet Coke and just tell you that me pointing out that that's a risk is not me promising that we're going to break 50 cents. So please, I can't be clear enough about that. I'm pointing out risk. I'm not promising that that's where we're going to go. But if there's 40 or 50 cents of worth of risk and you can defend that risk for 5 or 6 cents or 4 or 5 or 6 cents, that to me seems like um, a pretty good insurance policy, right? If I was telling you that there's 10 cents worth of risk and gee, let's spend 5 cents to protect 10 cents, no, that would be stupid. Big waste of money. But we know just from looking at the charts, if we go back down to the summer lows of 24 or 25 in corn, we've been there before. That's 40 or 50 cents away. So that's my take on that. I hope we don't get there. I hope that all the perma bills are right. I hope that all the people that are hating on the USDA are right. I hope that 3 months from now, corn's back up to 490 and we're all laughing at the USDA and they fired a bunch of people at the USDA, whatever it is that would make you happy. But in the meantime, we have to deal with the prices the way they are. So defend, defend, defend. Hope that you don't need it. In the beans, if that's the best we could do, a bounce, to 1049. I'm still concerned about where we're going to be on Friday. Lots of times, the report comes out on Monday, you dance around Tuesday, Wednesday, Thursday. What really matters is where we're on Friday, because then wherever we settle on Friday, everybody that's got a position on, I don't care if it's a winner or a loser, they have to stew about it all weekend, right? So Friday's going to be a big day. So get your risk on paper, please. That's all I can tell you. There's still plenty of downside risk to go here. And again, one more time, just me saying that there's risk there is not me promising that we're going to get there. It's not me being a bear. You can't come at me that. I've been doing this for 30 years. I stood in the trading pit for 22 years. I'm very happy to flip at any time. Just give me a reason. So I am not dogmatic. I do not get locked into positions. I know that my clients are always bet long, right? You're a farmer or producer, you're always bet long. So yeah, be a bull, but be a logical bull, be a smart bull. Defend your risk. I'm moving over to the cattle. Are we finally rolling over? I don't know. Again, a little bit lower here today. We did kind of have a key reversal in the March feeders. What does that mean? Oh, it's just a silly name for when a market makes a new high. We did. We made a new 10-week high, the highest price since October 23rd. Um, Almost a 3-month high, really. 2.5, 3-month high. And we settled lower. So the number that everybody's looking at, if you're curious, it's in the charts, it's in my book, it's in my letter, excuse me. Um, there's a gap up there in March feeders at 370.675. It gets filled basically at 375. So is there 15 bucks to go? I don't know. We've just rallied 66 bucks. That's amazing. A $66 rally here since the November low. Caught a lot of people. So we had an $88 rally, excuse me, a dollar 10 rally roughly, an 88-cent break. So we rallied, 100 pennies. We broke 88 pennies. Now we've just rallied back 67 pennies. If that is not a market that you want to be using options to defend yourself with, I don't know what is, because if you're using futures, wherever you set your hedge, you're getting run over. If you used any sort of sell strategy with futures, you're underwater here, right? And at the end of the day, if you're long the animals, you don't want to be giving away profits by having being short futures as a hedge. So when using options can be really your best friend. And the lean hogs, a new push higher today. April hit up to almost 93, but about another penny to go before we challenge the September contract highs at 94.70. We traded the high today of 92.90. So we're on our way there. Again, same thing, a great recovery. We've rallied almost 12 bucks from the lows. Uh, so defend that revenue. I can't really, talk about that too much. I wanted to wrap it up real quick. We'll talk about crude oil. Crude oil, when crude oil went from 78 to 55 and lost, 25%, 30% after we peaked when we bombed Iran, right? And then when we hit that low there just 2 or 3 weeks ago, we traded to a 5-year low, just under 55 bucks. We did bounce $7 from 55 to 62. There's a bunch of reasons for that. Doesn't really matter. At the end of the day, I think it was just a short cover and rally. Some of it's uncertainty about what's going on with Venezuela. Some of it's definitely uncertainty about what happens with Iran. And the market just need to recover a little bit. So we'll see. There might be more room to the upside there as well, but 60 is going to be the new pivot that everybody's going to be fighting over here. It did give us a kind of a silver lining playbook, though. You saw diesel fuel, heating oil, right? We went from around 270 on the highs back there about 6 weeks ago. We broke all the way down to 205. Today we spiked to 229. And when we hit those 7-month lows, if you read my letter or following along with me, I was like, hey, if you're somebody that uses a lot of diesel, once we got to 6-month lows, when we were trading on 210, between 210 and 205, I was like, hey, I'm not calling a low. That's bananas. But if I use a lot of fuel, I sure do like buying it on a 65-cent break. I'd rather be buying it aggressively down at 205 than up at 270. So that's all that was. Wasn't to say that we couldn't have gone down and taken out $2. We still might. But from now on, that was a pretty good opportunity there. So we'll get some more movement. On that note, I just would like to invite you, if you need help, if you're curious about what hedges are available out there, there are some good hedges still. You do not have to spend an arm and a leg. For the first 15 years, excuse me, for the first 10 years I worked with farmers and producers before we had the shorter dated options. I mean, good Lord, you'd have to go buy 200 days worth of protection, 300 days worth of protection. It was an arm and a leg. We'd spend 30 cents on a put, $1,500. Now you can get protection for 4, 5, 6, 7 cents. So all those arguments about, options are too expensive and they never work and stuff like that, I think as people become more and more aware of these shorter dated options, it's going to be the best thing for a lot of producers. And again, this isn't a trading program. Okay, I'm not one of these guys that says send me in 10 grand and we'll make $1 billion. There's thousands of guys doing it out there. I don't play that game. I'm working with farmers and producers. You're already long, What we're trying to do is make the best cash sales we can without a crystal ball, without having psychic abilities. And so we try and manage our risk so that we can stay in position to sell our grain when we want to. If we didn't have to hedge at all, right? If I just knew where the highs and lows were, first of all, why would we even farm, right? We just play golf all day and wait for our orders to get filled. You know, I'm anybody that can do that. There's two or three guys that do that, and trust me, they don't work with farmers and producers. Um, but for the rest of us, what we can do is keep track of prices, keep track of risk, keep track of the news. And that's what I do for guys. If you're a busy person, if you're running your farm, if you're raising a family, do you really want to spend 2 hours a day looking at charts? No, I spend all day looking at this stuff. No, that's my, that's what I have dedicated myself to for the past, certainly for the past 15 years since I've been working with producers. For the prior 20 before that, when I was on the floor, I would do my numbers on the train ride in, so I'd have areas that I wanted to trade. But that was my background. I spent 22 years trading my own money at the Board of Trade. I'd probably still be down there if the floor hadn't gone away. The floor went away, and luckily, I was able to pivot into working with farmers and producers. Been doing it since 2010. Um, I really enjoy it, and if you're looking for help, maybe it will be a good fit. Sometimes you find a broker that you don't like. It's just like in life, you know. You find somebody you don't want to be in business with. You find someone that you date a girl you don't want to marry. It's the way life is. But if you find somebody that you get along with and it's a good fit, they can help you make tough decisions. And I think that's what my job is. So, all right, guys, have a great rest of the night. 312-638-8868. Keep your eyes open. I'm going to do a private client podcast. I'm going to basically it's a webinar. Um, it's about 25, 30 minutes. I'm going to dig into the levels I'm looking at, why I'm looking at it, some of the chart areas, and hopefully going to teach you a little bit about the technical analysis that I look at to try and help you make decisions. Take care.